Hi everyone, welcome to another episode of our weekly market updates. I have Freddy, our CIO, with us. Now, February is over and we are now officially into March. We have a lot of exciting events coming up. Firstly, next Monday on the 4th of March, we have an event in Malaysia, Investing 101. Now, if you are tired of just seeing Freddy and Freddy alone and our CEO Michele conducting seminars, we have another really exciting one coming up the following week on the 11th of March in Singapore. That is a joint event between StashAway and BlackRock. So, inviting the specialists from BlackRock to talk about insights into fixed income. Freddy will be joining us as well. So
yeah, you can't get rid of me yet. I'll be on a one-to-one with the BlackRock specialist, and we'll be talking and challenging each other on what's the best way to look at fixed income ETFs. And it's going to be a very fun show, I think. So do check us out on Eventbrite and sign up and to join in this very interesting session
where they drill more into fixed income. So if it's something that you are interested in, do join us. Right, so 1st of March, a very important date, Freddy, because that was the date previously said that China, US have to come to a consensus of what to do with all these trade tension, right? So what's happening today? Do we have a conclusion, or where are we headed down?
Well, I think the deadline is no longer that important now, given that Trump has expressed that he's willing to give it a 60-day deadline. More importantly, there's still a lot of out of the deal going on. Earlier this week, Robert Lighthizer, the trade representative for the US, came up and say, well, just by buying more stuff from the US doesn't solve the trade tension. You need to be having more fundamental solutions to the broader issues, the enforcement issues. How do we track your progress, right? As one. Trump came up, said the same thing as well. And actually, something quite dramatic changed as well. The WTO actually ruled against China on farm way beyond the amount that's allowed under his international trade commitments. So that ruling is a big win for Trump.
Yeah, we can say that it's a key victory for Trump, and maybe that also sets the stage for the negotiations going forward, where it gives them a bit more room and leeway for negotiations. Because
absolutely. It shows up in the Trump-Kim summit in Vietnam.
And, talking about that, I heard that Trump walked out of Kim.
Yes.
So what's happening? And
it's the art of the deal at its best, and I think it's a very welcome move by both parties in the US. Everybody was praising the fact that Trump did not cave into some sort of inner desire to do a deal with North Korea to win the Nobel Peace Prize perhaps, but more Trump was this time, he has really shined in this case by walking out very early when the denuclearization is clearly not going to happen. Very welcome, won him a lot of points politically, and I personally think it's a great idea.
Showing his tantrum. Okay, great. So very exciting news on the US side, and I guess that also introduced a little bit of volatility to the market. So yeah, I hope not everybody reacted to it, because we are going to see more and more of this kind of tantrum. Not just via tweets, but via Trump walking out of Kim.
There is some volatility there for sure, but then it's been smaller than before.
It
seems that
the market is getting used to this kind of.
The market is learning about how it's working now. It's been a very consistent. And it's all about negotiation tactics. So the market has really been a lot calmer than before.
So if you did some profit taking or loss cutting during this period of time, it's time for you to rethink the strategy.
Well, you would have missed out on the good GDP print of the US a couple of days ago,
which shows that it was not very much affected by the government shutdown and all the volatility in the 4th quarter of 2018, right? So
well, we'll talk about that more later, but I think that people are also they were worried about Cohen testimony on Trump, how damaging that would be.
Indeed, he did. He testified in the House of Commons and before the Reform Committee, and said that it was not so damaging, was it?
I dig into the details a little bit more,
Okay.
and to my relief, and to some reporters' relief, there's actually not a lot of stuff on Trump and Russia. So
Okay.
the Russia election meddling angle, I think we are quite clear.
Okay. Key question then: can Trump be impeached? That's a
I
key
think
question,
there's
right?
not
Based
enough.
on his testimony.
There's not enough
Yeah.
in that testimony
Okay.
to. My personal opinion is there's not enough in that testimony to impeach Trump.
Okay.
In the sense that the issue with Trump is he ramped up his estimates of his net worth when he wants to borrow money from bankers, and he ramped it down when it comes to paying taxes. So
Okay.
that's more civil in nature, and it's not enough to really impeach a president in office, right? So to my relief, I think it's a market's relief as well that, that there's not a real problem with the Russian election meddling in Trump. So
Okay.
that was very much the news that I was focusing on,
Right.
and we're all clear.
Okay, so Freddie, I've been thinking, if not for all these drama activities and tantrums by Trump, the market is really boring. And given that the market has been going mostly on the upward trend since 2009, there's lots of talk that we are really at the late cycle of the economy. And given that most of us have gotten our bonus, hopefully, in February or later in March, how should we look at investments? Because if we are really in the late cycle of economy, should we be holding on to our bonuses, or should we enter now, or how should we enter?
Well, we certainly heard about the late cycle economy topic it's very common, it's been everywhere. But if I wind back the clock, we've been hearing it since even 4 years ago, and then 3 years ago, and then now it's happening again.
I think the first time was in 2012 and
Yeah,
then 2015.
Exactly.
Last year, definitely.
Yes.
And
right now.
okay.
So really, somebody is going to be right eventually. But what I'm going to really focus on is that look at them. Just let the numbers, let the economic numbers speak for itself. And as you should remember, unlike us human, there's no biological clock when it comes to the markets or the economy. It's not like human where we need to, we age, we have a certain biological clock. But
speaking of which, can I cut you a bit? So speaking of which, is there like some indicators, statistics showing the length of the economic cycle? Is it 5 years, 7 years, 10 years? Is there any consistency?
It's never reliable. For
Okay.
Australia, it was like as long as 20 years, it's still growing.
Okay.
For the US, it's somewhat since March 2009
Okay.
to now.
Before
So-
that, we had shorter cycles, right?
The people talk about average length of cycle being 5 years or something, but
okay.
really, when you look at the data more carefully, it's a various length. There's no fixed rule when it comes to the clock of the market.
So there's no way to game it in a sense.
Now,
Okay.
so I would just let the data speak for itself, and I would like to urge users and also a reminder to ourselves that we continue to focus our portfolio decisions, our investment decisions on the medium and long term, and we let economic number guide our decisions.
Okay, right. So the economic numbers says for now that we are still in an expansionary growth stage, maybe in a later stage. But what happens? What happens? The question is, what happens if we are really expecting a economic crisis in 3-4 months' time? Are we ready to to be prepared for such a situation, especially as StashAway?
Well, very good question.
Yeah.
I think for not just StashAway clients, but just anyone in general, you always start with an investment plan. The plan should help you detail how much you're going to save every month, less your spending, and you invest the net, which is your savings. And you should have a plan that details your schedule or how you enter the markets. If you have a lump sum mentality and approach, you invest in the market, and let's say tomorrow something happened, and then your whole net worth is now exposed, you would be very, very emotional. However, when it comes to having a plan and averaging into the markets, it keeps you cooler, it keeps you less exposed, it smooths out the volatility of the net worths. So a plan is really the key. The plan will set your risk level, will set how you schedule your investments. So really, it starts with planning. It's not about getting the market timing right. It really, really never is. So I would urge our users to really go back to basics and review your plans. We're in the new year. I know it's still still early in the year. It's still good to always review your plans and see if any parameters are set correctly.
Great. So have a plan and stick with the plan.
Yes.
Great. So thanks for joining us again, Freddy. Everyone, if you have any questions, please write down in the comments and we'll address it next week. And remember, our 2 events are coming in Malaysia on the 4th of March and in Singapore on the 11th of March. Do join us. Thank you.
TGIF.